Okay, I want to look at this is Ssys. All right, these are yearly bars. Okay, I drew some horizontal lines on pivot areas for this year. Okay, a high of 138, and it's down to, we'll just say 90% off. Okay, what I'm going to try and point out is that this is just basically just a mechanical tactic of going after something that you perceive as a opportunity here. And what caught my attention was, first off, I watched a little program, Print the Legend, and yeah, 90% off. Okay. Print the Legend on TV about 3D printers, and so I just kind of naturally brought me back to this. It was dated, and of course, it, like everything else in the old days when it used to be on the cover, that was the end of it. Okay, so what I'm looking at here is that Ssys came down this year, and like I said, these are yearly. All right, you've seen this type of pattern before. Okay, fat bar, basically where it was selling all year long in 15, and here we are in 16, basically slowing down. This is a logged chart. Okay, so when we look at different type of patterns, like here, I talk about it coming back about half back. So I just drew in these pivot areas, or pivot areas. This is actually for the decade. Okay, right? Yeah. Okay. So these are Gazelle decade pivots on here. Oh yeah, don't worry. You go through decades just like weeks. Okay, so you have an area where it kind of stopped. This is where it opened this year, and this is where it's trading now. Jabbed below it and came back up. Okay, so as I walk back into this here, this is like I said, this is a yearly. All right. Targets of 31 and 47. This really isn't half back. Basically, when you look at it here, going forward, all right, basically rolled over. This is your dots on here, your SAR. Also, you have unbalanced volume, the red line. Okay, so a couple of areas were oversold. It was further oversold in the past. That's before it took off running. And this is I would say the .com. So this actually carried over through the .com, and it basically peaked out and it's worked its way back into, this would be like a happy area. Okay, and this is on a quarterly, on a monthly. Now you have a monthly. Okay, so this year coming off the lows, right, and now made an attempt to go higher. Basically was reversed. That's what tells you how weak it is. This is the pivot. Was it 21? 21 is the pivot area. Okay, and S1 is 11, and then $5. Okay, so those would be targets on the downside. Okay, and then on the upside it'd be what do we have? 21, 27, 36. Okay, and the monthly, I showed you that there was a target around 36, 37. Okay, so there's a monthly chart. Then you get down to weekly. Okay, so we have an oversold bias there. So we have had for a while here unbalanced volume that it's washing out. It's kind of stuck in a range between, we'll say, 15 and 30. Okay. But what was interesting here is when I got down to a daily, and remember I'm looking at the yearly chart, a lot of volume here. It's kind of like, I call it somebody's making a stand. All right, so this is basically, it's stuck between, we've narrowed our risk. So it's basically from 17 to 19, we'll say. So it's a $2 range from that whole big picture, and that, to me, this would be sort of, because of the volume and the extended period of the downtrend, we're looking at either one, somebody's making a stand on here, two, they're done on the short. But to me, there's somebody's making a stand. So we break it down even further. Now we're down to 2 hour. Okay. Now, I'm not saying that this thing's going to take off, but the risk had dropped. You can see how a lot of volume in these bars. Somebody has to be buying, well, somebody's selling, pretty much, right? and then you had a move off of here, basically came back into the cloud. This on this is just basically November on the cloud, and then narrow bars again on the way back. Short term, you have the unbalanced volume once again. So what I would be looking for, okay, here's 18, well, we'll say 17.92, and so we're down to what, 60 cents, less than 60 cents, 50 cents. Okay, so what I'm getting at is if you do buy, we'll say 18, we'll just use round numbers, 18, you could use the stop of 17. I would actually lean that this would be one of those where if it makes another slice through here, okay, makes another slice through here, I'd be interested in, you know, saying you buy at 17, buy at 16, that kind of thing here. But I would, after that, begin to trail it on the upside to see if this thing does reverse, comes on through, goes below where people perceived it as a value before they either won it out or they covered. They finally gave the bulls finally gave up, that kind of thing. Oil traded sideways for a decade. It took 10 years before the last person finally got out of their Exxon stock and it went higher. All right, so now I'm looking at this here as well. Okay, we'll say that this is the final washout. Okay, and we had the first mouse, you know, and now it's come back. Okay, we're actually trading, Ssys is trading above or in the area of 50% pullback. I'll just drop this down to, say, a 1 hour. Okay. All right, so you have this here where all of a sudden it comes down and comes back a decent amount of buying. Your dots have now gone the other way. So here, one of those, what you're looking for then on Monday is a continuation of the NASDAQ lower, that this goes with it, okay? Because as you saw, the Ssys peaked years ago and it's dropped 90%. Computer hardware, I guess 3D printing, whatever, there are options in there. This is another reason why I really don't like equities, okay? I prefer commodities. What's the downside? It going to zero, but just the mechanical side of this thing here. Okay, say we're getting at here about, what is that, 56 cents? 56 cents, okay, so the 50, so if you buy this here, from 80 to on the downside, okay, in your stop, we're talking 40, 50 cents, okay, and then another whatever 30, 40 below it here. But it's one of those where, yes, mechanically, you know, this would be your stop to get out if you go long. Okay, I'd be interested in supporting if anything came underneath here, just due to the fact of this pattern here, that somebody came in and either covered their shorts or what have you. You had a tick up, and then over the pullback in the NASDAQ, this followed suit. Okay, but looking back at it, okay, say if you do buy and it goes above 18, now you're talking, you know, 70 cents. So what was a 50-cent risk is now 70% profit, but you can actually have it continue on, just in case there's a number of shorts that are in there that would have to come in and begin to start covering on this. All right, here, 15-minute. Okay, this one a little bit, you can just see that like this upper red line here, upper red line. I have 12, 24, and 48. Basically, those are just numbers that came off of time, because the was it lowest common numerator, time, at 2s, it's in there. So they are multiples of 12. So it's basically time. But you have where the red line comes down. Okay, so this would be, we'll say, a trailing stop or to get you in. Okay. So the price comes down here. What do we have? Thursday. So we have the price comes down on Thursday, gets to the top of the cloud, and basically pulls back. You did have a fat bar on the close. So you might have people here who bought in on Friday's close. Okay. You can see that during the fall from 19 to 17, unbalanced volume began to pick up. So that's how I read it, as you had accumulation going on here. The pink one is a Bollinger Bands width. So there's something big. Okay, how you read the Bollinger Bands, it's narrowed again. Okay, so something quote unquote big. Okay, is going to happen here. Not like you're going to get a pop out. It's either going to go up, continue to the upside, or it'll continue to the downside. But how I read this is how it came off the bottom. Some pretty big bars on here. Came back more than halfway. We're basically back to what was support is now resistance, and this is on a 15-minute chart. Say, for example, we clear 1790, okay, 1792 or whatever. I probably think it's off for a run because it's the 15-minute chart. We'll go back to 30 here. Get a little more data in here. Okay, so you see that there was a stand in here. A lot of interest on both sides, right? You have this up day, down day, comes back down. You get a lot more buyers coming in here. Okay, so you're going to get people who are going to want to try and support this here. If on here, you're going to want to go after the previous high, so it's 21. So it's basically 18 to 21. So it's $3 on a stock. Okay, the deal here though is that what you may want to do is hold on a little bit longer, because we were talking about getting it back into the 30s. So 30s show up on this one. Yeah, it does. We're getting 25. Okay, so if this Ssys holds down here, okay, holds this, may even double bottom, that kind of thing, we all do it. If you can afford 500 shares, it's one of those where, buy at say 1750, then buy back under here again, and then buy, because the computers and everything are all going to look at these pivot areas too, right? And then actually wait for it to come back and go the other way, and then buy you want to buy with it. We talked about that before. If you buy 100 shares here, 200 shares, and then another 100, you're long 300 shares. Well, if you come back through on 18, you may pay up a penny for the bid-ask spread. It will say it costs you $1 on 100 shares, but because of that you paid up a penny, you're going to help the other 3 that you purchased on the falling of the knife deal. Okay, but what I'm just pointing out is the mechanical side of all of this. If it does come back through, set an alert for say 19 or 1791 kind of deal, 94. You'll get a swing here, but it's one of those that if you do get a swing, here are your next targets, 21 and 25. And then, like I said, I marked up into the 30s of the quarterly. Okay, so here are the 30s. So you get one of those what's this here, daily? Okay, so you have the daily, big strong bar here. Somebody's making a stand. There was the initial push off of it. It came back. The unbalanced volume is holding about 50 cents. So, like I said, safe powder for down here. Here are the low ends, 14, 15, 16. Some people might be looking for on the larger. It doesn't mean that it can't go up to 21 and then come back down. But here the test would be getting it back, get Ssys back into past 1950, which would be, here's 1930. Getting it back through here, it would leave some of this behind. Think of it like the pound, it had a good stand on here. That's basically how I'm looking at it is, there's a potential here of a $18 stock going back into the 30s. All right, and as you can see, this is April through November and that. From what I see up here in earnings are going the wrong way. I'll assume that's why the stock's been having such a tough time, but you have something here that's 90% off. You have to look for the opportunities, and it just basically, it came down to the mechanics of it. What's this here? 25, 26. So, the opportunity is there. The market, on a monthly basis is oversold. You had some volume come in, basically make a stand. But you know, this does look like, well, Kev, gosh, that looks like a wave 4. You know, that you have, you know, it looks like it's going to roll into here. That's, like I said, that's the risks we all take. You know, basically, if you really want to wait on this one, what you do is you basically trail it down like these little pink dots. If it does move, declines, comes through here and declines, the pink dots are going to pick up. So that would be your trailing stop to get you in. Even though, you know, the setup is here. You know, I'm basically, I didn't, you know, looking at this, unless this bar was here, I probably wouldn't be interested in it, because it was just, it's working its way on its own. But this was here, just enough attention that it kind of stalled, stopped, poked back up here. You know, so you could set an alarm, say 1927 here, because if it changes here, then you may be changing the larger trend on this. Okay. It's whatever. It's timing with technology, blah, 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 you know, but like I said, you know, here's 2014, you know, the NASDAQ ran into a new high. This is in the NASDAQ. It's, you know, NASDAQ came off, and I'm beginning to see things that people are saying, hey, we're all getting out of the NASDAQ and we're getting into something else, but this one's already moved here. I mean, you know, it's already dropped 89% plus. Okay, so, you know, it's kind of like, what did we have? Nanotechnology, whatever the du jour is. But it was just the whole part of making a stand in here that there's a potential for a reversal here. And what is this, 27 and 36? So you could actually get a double out of this thing here if it gains some traction, basically clearing. Clearing. I mean, we're talking. What's that? 18 to $1.30 here. Okay, but it's just, this is right now. It's narrowed to, what was it, 56 cents. So this is it. So if you buy in on this, you know, to be mechanical about it, your stop is 50 cents away. You know, if it clears 19 and change, more people will come after it and get involved. You know, because if you've had 3 years of it going down, it's kind of like buying VIX products. You know, you've been telling me to buy a VIX product for 8 years and it's not working. Well, that would probably be, that would tell you that the sentiment is pretty much ingrained. And that's when you know, the same thing with me. I looked for pullback in the Brexit. We got the Brexit. We swung higher. I said I didn't want, you know, the last 10% to 2,400 or whatever. You know, I don't like what I'm seeing. We get the rollover for the election overnight in the futures, which of course, if you opened up, if the American market was open, you'd need a few more coins in there to support the thing, right? Compared to just the futures, all you had to do is just come running back into the S&Ps. And, you know, those are pretty big swings, and where you wait for it, luckily, hey, I'm on the West Coast, so not a problem staying up. It's kind of like Friday's non-farm payroll. Once it's over and done this time of the year, quiet, you know, that kind of thing. Things got kind of quiet here. Also, with the double bottom, you could draw a neckline across here too. Let's see. So that would be your, there we go. You know, you have a vertical trend line type of deal. You know, now your horizontal is right here. So you can swing that and go for it. You're going to have your first sellers here at 21, right? If you swing higher, you're going to have your first sellers at 21. And then that's when you come in, and that would be the world famous buying the dip. Okay. Also, I just put up quadrants on here, right? Is that this one? It was this one. All right. Quadrants. All that does is it hits the highs and the low for me. And it also lines up on here too at 21. So you have a deal here. You have you pick up $3 on an $18 stock. I'm seeing more and more double-digit moves and issues, and let's think this one through for what your annual return is on the stock market. I'm not saying, hey, look, throw your whole portfolio in here. It'll help out the situation, but like I said, there's the risk right now is about 50 cents, and if you take it, you could get maybe $3 out of it for the first stopping point. To me, look, with Friday's close. Let me upload this here quick. Friday's close. You may have had people who, let's see here. Okay, that's not a very good bar, but you have at the close here where there was a bunch. This was Friday's action. So you got a decent action here, basically chopped back. This is they call it a P formation on a market profile. It basically from Thursday lunch reversed into Friday. You have a P formation that's short covering. So you may have a continuation higher here, which is what? We'll call it 80 so it's at 40 cents. So yeah, all of a sudden you can be the next swing up here for intraday, you're 40 cents. You had 50, you get something, all right? If you're in it, then you'd put your stops down in here, okay? Just the mechanical side, you're now playing for dollars with this here. Even if it gets back to halfway at 1850, what's that, 70 cents. So, it's a start, and it could mount to something larger, but that's how I wanted to look at it. Like I said, for a mechanical type of thing here. Same type of, it gets a bounce, comes down, comes through, falls. It's not going to here and come down. And so that's why, you always say powder or something. Even here, then it'd be, you're working on a double bottom here. But it was just one of those where I like I said, I saw this. There's obviously was enough for both buyers and sellers. It triggered both sides. You had a bounce up, didn't really fill the gap, came back down, but it had a short covering type deal on Friday. That would be helpful overall in the market, right? Like we saw with our little pink dots. This is part of the NASDAQ. This is the nice composite on here. The dots are here. Basically, I also looked at, this is the dots, the pink dots, and McKellen summation index, the number of stocks participating. So, it dropped off from August on. The underlying market basically corrected. You had a bounce back just like previously here. So we're back into this type of area. Would it help out the situation? Well, yes, it would. The other side of it is if this thing comes down, it's been already clubbed. So how much is left on it? And not everything, even on down days, there's still up stocks. So, but that's what I just wanted to point out, and we'll see more next week on Stratasys, SSYS.